Good morning, momentum traders, and my other fellow traders that are looking to follow this gamma exposure path. Let me tell you something, guys. When it comes to trading, the best tool that you have added to your technical analysis is gamma exposure by trading volatility. So, and I'll explain this. I'll explain it today. And please trust me. Just hear me out. Just watch my videos and watch how closely accurate my numbers are, and you'll understand where I'm coming from. All right. So what are we looking at here? So this look, light bluish. These are call gamma strikes, and these darker bluish colors are put gamma strikes. These bars here are areas of liquidity, right? So the price action tends to hover towards areas of strong liquidity. Why? Because market makers aren't in it to play the market directionally. They're in it to provide liquidity to the market. They make money off between the bid ask spread. So that's why the price action tends to move towards liquidity. As you see here, we have strong resistance here for the S&P 500 at 415. Beyond 415, liquidity kind of drops off here and drops off down to 418. You can see there's a strike over here for 420 to pay attention to. We're also seeing that there's some put action right here. If you notice that we're in an area of low liquidity, so we're going to start moving in a direction, either going up or down. Currently, pre-market looks like we started to go up. Looks like we're seeing some weakness in the pre-market right now. S&P 500 is barely staying green. It's only up like 0.03%. So it's really struggling right now. I can see we see that our first support is going to be 412, but then it's going to come down to low liquidity, and then the high liquidity area right here is 410. This is a bit. This is 410 is tend to be our spot that we bounce off of. We bounced off of 410 last week. It'd be something to pay attention to as well. I just feel low liquidity over here is at 4750. Today I can see our price range depending if we fall. If we get to 410, I see us being kind of get stuck between this price range over here between 412 and 410. And then if we were to get above 413, I can see us getting into this price range where we get 413 to 415, maybe hit a top of 417. With that being said, let's take a look at the zero. This is the structure where it's currently the structure of the market now. It changes as the market continues to move on. This changes throughout the day. So this is something to pay attention to as your first initial look in the market. Let's look at what the zero DTEs look like. Zero DTE looks like we're gonna be sandwiched between 414 and 413 for quite some time. We can definitely hit 412, but right at 412 we hit an area of low liquidity, so we could definitely bounce off of 412 and get right back in 414. There's not much interest beyond 415, and as you see, there's not much interest below 410. So today looks like it's gonna be a little bit of a tight range in trading today so far. If we look at the options volume chart, we can take a look at not the option volume chart. Let's take a look at the skew chart. If we take a look at the skew chart here, it's something else we'd like to pay attention to as well. As you can see right now, our lower bounds for the day is about 408, and then our upper bounds is about 416. This is something really to pay attention to, guys. So if you see us hit 408, this is a place you definitely might want to be interested in getting calls, especially since it's under 4010. That's way out under the 410 support that we're looking at. 408, if we were to get there and break 410, I would definitely look into getting to S&P 500 calls. And then the 416 is probably where I'd look at to maybe see where the price would probably stall out, or maybe looking to get some pulls and some puts for the day. I see for the market for 1 week, we hit 401 and 423 looks like it'd be high for the week. I'm very interested in seeing how far we can push this week. And for the month, we see 390 and 434. So these are all numbers to pay attention to as well, guys. So with that being said, that's the S&P 500. We got Tesla earnings coming up. This will be something to pay attention to. If you notice here, Tesla earnings, there's a lot of put gamma, a lot of call gamma right here. That's because it's being hedged pretty well. As we go into earnings, you can see our areas of high liquidity is 190, which was a strong strike last week. Then the next strong strike is 195. And the next one besides that is 200 going into earnings play. So Tesla right now is showing a lot of bullish gamma here. We're right above the GEX flip. Anything under anything under 183, you can go ahead and get puts all the way down to 180, possibly down to 175. But Tesla's been holding real strong over 180 for the past couple of weeks, so that's something to pay attention to as well. 420, you can see right here, we have a lot of roadblocks here all the way to 200. It's not going to be a straight shoot unless this can also change. This is 421. This is just what it looks like in the morning. If Tesla were to get any strength and any strength for a strong push, this structure can change a lot. So this is something I would pay attention to for Tesla, especially if we start to see it push up above 190. 190 tends to be the first magnet. I think once it gets inside of 190 and over 190.67, we can see it easily push for 200. So look for a Tesla to get over 190 and 192 for a push for 200 for some push action for it to run into this $200 pull, this $200 price target. Another thing I want to point out to you is Amazon right now. Amazon also has earnings this week, and it shows that right now it has price between 100 and 105 is this price target. As you see right here, there's a price, one standard deviation out here for 110. It has Amazon is showing some strength pre-market, and as you can see right now, if we look at the gamma structure for the day, there's a strong magnet for 105 on Amazon, and beyond 105, you can see it's going to push really fast to 110, which makes a lot of sense right now. Because why is that? Let me show you. If you take a look at Amazon right now, if you see Amazon right now, if you see a push, Amazon right now, you see a little bit of resistance right here at 103 and 105. But if you look at the weekly chart here, it's just now breaking up above resistance from last week, and Amazon has a straight shot for at least 113. So 110 target for this week is not too far off, especially with earnings coming up very soon. I think earnings coming up. Not this week, but next week. So Amazon is definitely a good play to be into, to play for the long run. Another name that's showing some strength this market is Baba. Baba currently hit as support. Prices right now is at 195, and the area of high liquidity is 100. We can look for Baba to go for 100. Baba under 191 currently right now is a bearish flip. So right now, Baba shows some strength. It's at 195. Baba pre-market is at 96, so we can look for Baba to go push for $100 sometime this week. If we look at this chart right here, we see Baba is currently at 195, it's currently at 196. The area of high liquidity is 100. It's an area of resistance. So we see Baba push for there. If Baba were to get over 100, we can see her push for 105. So we can see right now we're seeing a little bit of resistance at 98 here at Baba, and a little bit of resistance here, but I mean, for the most part, Baba has pretty much a straight shot for 95 for this week. So it's something that you really want to pay attention to for Baba. For resistance, you might want to play either bullish bearish credit spreads here. So maybe to play the Baba game going under to 100. So you can play calls up to this point right here, and then you can play bear call credit spreads for over 100, just to capitalize on the play here, guys. So that's what I have for y'all today. I'm going to continue to do more of these trading volatility videos to show you the strength of using gamma exposure when using trading the market, and y'all have a good one.